Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is live trading Q&A. Today, I'm going to answer some of the most common questions that I receive, and also I'm going to take any question that you guys want to ask, either in the live chat in howtotrade.com or out there in YouTube land. I hope our chat's working. I think that it may be, it may not be, I don't know. But definitely, if you're interested in chiming in and having me answer a specific question, I will certainly do so if I can. Remember, there's a couple of rules on the live stream here. My rules are very simple. If it makes money, it's the right answer. And also, if I don't know the answer to something, I'm not going to BS you. I'm not going to sit here and spin up a fable or a yarn and try to convince you that I know something that I don't. I'm not going to do that. My background's very simple. I've been doing this since 2011. I've been in and out of the markets. I've had good days. I've had bad days, but I've been around for a long time. And I can tell you that half of trading is being able to always learn. And if you're always learning, you have an opportunity to succeed. And that really is what this whole thing's about. I like to call it, a lot of people call the United States and America the great experiment, the grand experiment. I call everybody's trading career the grand experiment. Do you have what it takes to stay in and day out, month after month, year after year after year? Do you want it that badly? Can you do it successfully? I mean, everybody knows you can't just keep going into these markets every single day and lose money. You can't do it. Now, there's times to take risks and catch a big move, and sometimes you get stopped out, sometimes you don't. I'm going to go over one of those that happened to me yesterday. That was a heartbreaker. One of the worst trading days I've had in a very long time. Happened last night during the pre-market. Had a perfect market read on gold. Knew exactly what was going to happen. Wound up getting stopped out. Why? Because my position was too big and my leverage was too large. I didn't have enough cash there to service until the big move came. And boy, when it came, it was a monster. So all that stuff goes into your psychology. I learned a valuable lesson yesterday. And I got lazy and I got sloppy with my position sizing, and I just took it for granted that I was going to hit the trade, that I was going to hit it. Very rarely do I take positions. I'm not a position trader. I'm a scalper. But I saw it. I read it. I was there. I put the bet down. I just didn't figure it out. Put too much on it. Didn't have the cash to service the position. Led to one of my worst losing days in a long time. So when we start talking about trading, I know what I'm talking about. If you have any questions at all, psychology, markets, strategic, go ahead and throw them in the live chat. Give them a shot. I'm going to start out with a few things that I think are relatively important. We're going to talk about what a market driver is, what exactly I mean by key events, and what I mean by knowing your economic calendar, and also reading the news. Then we're going to answer a few questions that I get a lot about the CME FedWatch Index. What is that? Why do I use it? What is it designed to do? And what does it tell me? And then also, I'm going to monitor a few markets. I'm going to take a look at a trade idea that we put out yesterday. I'm going to do that right now. And then we're going to look at some crypto. I want to look at Bitcoin. I think it's important to look at Bitcoin. And then also there's one in there that nobody's looking at right now, and it's one of the biggest moves we've seen in a long, long time in live cattle futures. And we're going to talk about how that U.S.-UK trade deal really has sent some major pressure on live cattle. We haven't seen live cattle plunge like this in a week in a long, long time. So good to see everything. Jonathan Ross, hey, what's up? How you doing, Jonathan? Welcome to the room. Dylan Sean Edbert, damn. Well, yeah, damn's right. That's what I was left talking to myself, and we'll go after that I'll break that down for you in about the middle of the stream, and I'll talk actual numbers. Some of you are going to be blown away. Me, I'm not real pleased about it. Wrecked my week, but had to take the shot. Just didn't do it right. Always remember that. You guys are going to be in the markets a long time. You're going to make mistakes. The first thing you have to do is you absolutely have to learn from them. Learn what you did wrong, identify, have confidence, and be ready to trade again. I didn't trade today. I got one trade on the board that I think I might get later today. But if it doesn't come my way, it doesn't come my way. That's okay. I have no intentions of diving in with huge leverage today. The wound's still a little bit open, but I'll be back. I'll be back Monday morning. I guarantee you that. We'll be ready to go again next week, and then we just start all over again, building momentum, and that's what this game's all about. Let me see, Andre. Hi, how you doing, Andre? Okay, guys, let's get off with the first trade idea. This is one of our more popular strategies. I get a lot of questions on the 920 EMA, and I always am asked, first and foremost, Shane, what time frames can I use the 920 EMA on? You can use it on anything you want. You can use it on a 15-second chart. You can use it on a daily or a monthly chart. The mechanics are the same. What's going to make you successful is, number one, being able to align risk versus reward. Number two, being able to stay in positions until you hit your profit target. And number 3, knowing when to trade it. Now, this was a trade idea that I put out yesterday. Now, it may or may not come to fruition. I think that it's going to be a pretty good position, though, and it was in the U.S. dollar, Canadian dollar, 920 crossover. Very simple. The 9 EMA crosses over the 20 EMA, you buy. Now, this strategy, I'm almost ready to throw it on the stock market and start putting some real money down on the stocks, because I watched the daily chart on these stocks with the 920 crossover, and I'm very, very impressed by what I'm seeing. Now, granted, we hit some tech home runs. I'll show you Tesla here in a minute, but Tesla, I think even NVIDIA was in on it. This is a powerful swing trading strategy or investing strategy for stocks. Of course, you have to understand when to trade stocks and when they're volatile. Right now, the volatility is absolutely fantastic, and we're seeing the VIX, the volatility index, drop. So you want to be long. You really do want to be long now. And this right here on the U.S. dollar, Canadian dollar, I've kind of got a hunch that you're going to see the WTI crude oil come off in a big, big way. And I think that fuel sort of builds my case for this trade. But right there, the 9 crosses over the 20. There's our gold bar. This is from our coded video on our channel, on our How to Trade Calm YouTube channel. And then right there, you get a nice big green candle, which was pretty good. It's a pretty good, nice candle. So this is good stuff right here. So we're nursing that long. I don't recall the profit target off the top of my head. It is a position trade, so I believe I did look at market structure, and we're probably shooting for something right up in there, maybe right around 142.50, something like that. Stop loss, relatively straightforward here. You can certainly build it beneath that swing low. I get a lot of questions. Shane, where do you put your stop loss with the 920? Swing low, prevalent swing low. However, I don't necessarily mind this, something like this. You sort of have a spike low right there. I don't mind that. I just would really give this thing a room to breathe, at least for the first few days, and see how price action responds. So that's a good look at a 920 play on your U.S. dollar, Canadian dollar. Get a lot of questions about that. I really am liking this, though, for stocks. I think that we could really be onto something here. I love the coding. I love everything about it. I mean, here's just a huge winner on Tesla. I keep coming back to this week, not really to show off or brag, but it's like, 285s is what we were buying right on the bar close, and it just ran right up and took our 325 target out with reckless abandon. Now, I did want to also look at NVIDIA. Got essentially the same trade. Shane, that's all big tech. It's all correlated. Yep. How about Ford? Look at that. Strategy is no joke. You go right there. You got a pretty good run there. And then what? You got stopped out maybe. You also could have taken it off right there on that crossover. There's a lot of options when you work in the daily time frame with a 920 crossover. You're investing, you're swing trading, and you're investing. But, boy, we have seen just some really good stuff here. And even though you got in at 10.05 and now Ford's at 10.77, that's still almost, 10%? It's very close, 7.5%. It's just a fantastic strategy. So that's one of my favorites. I wanted to start off with that because I do get a lot of questions on that 920 EMA. So another one of the questions that I receive pretty much religiously is, Shane, what do you think about the news? What makes a news story move the market? I got a great question from Bobby Bob earlier this week, and it was very simple. He said, with Trump talking all the time, he's messed up a few of my trades. How do I know when he's going to talk or when these folks are going to talk? And I said, you don't. You don't. What you need is a news feed. So what should you be doing? CNBC. I don't like CNBC much, but it will tell you when the big stories are going to happen. Go right there to latest news. Typically there's a link when somebody important's talking. Yesterday we had Jay Powell talking. He was talking all about tariffs and all this other jazz. Well, I mean, was it important? No, not really. Did it move the markets? A little bit. But I knew it was happening, and I knew it was happening because it was listed here. So I would send you either to CNBC or Bloomberg. Maybe Fox Business is another one that you could just sort of pick your price. So I would always get this question a lot. Say, Shane, here's the big story today, consumer sentiment. Has consumer sentiment impacted the markets today? No. It hasn't. I want everybody to understand that the people that write these stories often have an agenda. I have no idea who Jesse Pound is. I will tell you right now that he looks like a junior writer, and he took orders to write this. He probably didn't even get to write the headline. Consumer sentiment slides to second lowest on record as inflation expectations jump after tariffs. one problem with this story. Everybody's buying stocks right now. The VIX is down, and also your CPI and PPI numbers are down. So your inflation expectations jump after tariffs. That's a media-driven story. I know that that's BS. That's not going to drive the markets anywhere. That's sensational. Now, what could drive the markets? Well, you really wonder. You really wonder. Something like this, Anthropic closes $2.5 billion credit facility. That threatens liquidity. Maybe that'll move the markets. What else, though? Your economic calendar, key events, those will move the markets. Stuff like this, though, the headlines, the only thing you should be really looking at CNBC for is if somebody went to war. That's a big one. If there's military strikes somewhere, if somebody's getting ready to speak that's important. Right now, that's Trump and Jerome Powell. Very few other speakers move the markets. And then lastly, if there's a key economic event. That's it. That's all there is to it, guys. So I wanted to answer that front and center. Shane, which one of these events moves the markets? Some of these are absolute media nonsense. That's media nonsense. That means absolutely nothing. That's why, that headline, that's why the markets are up today. Come on, give me a break. But yesterday when Jay Powell was talking, and I learned it right there. I said, oh, Jay's talking. That did move the markets. Gold went crazy as he was speaking. So a lot going on there. Understand how to read your economic calendar and also a news feed. So you definitely want to be interested in that. That's for sure. Let me see. Let's see. We got an idea right there. Jonathan Ross, Shane, I'm a 1-minute scalper. Do you avoid all impact news or only the high impact like CPI, NFP, etc.? Yeah. If you're a 1-minute scalper, generally a rule of thumb is if you have a 3-star economic event, give me 1 minute, I'll show you what I mean. If you have, say, a 3-star economic event, you're a 1-minute scalper. What are you scalping? Just curious, Jonathan. General rule of thumb. This is just a basic economic calendar, investing.com. Are you really worried about building permits? No. You're not worried at all about that. Are you worried about housing starts? No. You're looking for 3-star events or key economic events. Now, as a general rule of thumb, the way that you can avoid some of that strife and issues and problems is just limit to what you're going to do. Just limit what you're going to do to stop trading, say, maybe 2 or 3 minutes before a number drops, and then resume trading, say, 2 or 3 minutes after that number drops. Because what happens is a lot of folks, when they get into the markets, they say, okay, I'm just going to avoid all economic events and I'm staying completely away from it. That's probably the smart thing to do. But just because you have NFP in the morning doesn't mean you can't start scalping your 1-minute chart 5 minutes after, the NFP drops. As a matter of fact, you might want to be doing your 1-minute strategy at that time because the market's liquid and it's volatile. So that may be a great time for you to trade. As far as I don't avoid CPI. I don't avoid NFP. What I do avoid is Fed Day. I don't trade on Fed Day. The FOMC days where Jay Powell is going to give a presser, I don't do it because a lot of times the liquidity isn't there in the markets. A lot of people are on the sidelines and they don't trade. So the only one that I really don't do anything on as a particular day is going to be Fed Day. I come in here and I cover it and I talk trash about Jay Powell with you guys. That's what I do that day. But every other day, I'm pretty much in it. But my general rule is about 5 minutes before the release, I'm on the sidelines. And about 5 minutes after the release, I'm also on the sidelines. Now, if I have a key macro number, I may make an exception, but that gets really complex. And for right this minute, for the sake of our discussion, 5 minutes before and 5 minutes after is my rule. Pretty much the only events that I worry about, CPI, an FOMC release, not really the FOMC minutes. I've been known to trade through that, and NFP. But right now, some of these pressers we're seeing with Trump, they're huge. They're moving markets. So we've got to be very careful with what we do when trade deals are announced and things. And that's where you almost have to. You got to be looking at a news feed. You need a news feed just to monitor when these guys are going to talk. Okay, so I hope that helps, Jonathan. Let me see. Dylan. Shane, what EMA strategy is best for 5-minute scalping? I'll tell you what, Dylan, I really like this one. I got a lot of static on our live stream. I actually had a guy critique me, said, quote unquote, shut down this clown show. I got that comment the other day on YouTube on our live stream, and I said, I showed you the Fibonacci retracements and different ways to switch your your risk versus reward. And we had a winner. The guy still said shut down this clown show. So I love that. I love the critiques. People talking trash. They got what I call keyboard muscles. I got real muscles. I'm not worried about it. I'm really not. I want everybody to remember, though, if you find yourself in a position where you're online and you're yelling, you're aggressive towards someone and you're angry. And I've had it happen a few times, not very many over the last 4 years, but I've had it happen a few times where people have got aggressive with me personally. You remember when you're in that aggressive mindset and you're pissed off, you're going to lose. You are emotionally compromised. Now, there's absolutely nothing wrong with coming in, asking questions and critiquing strategies. Absolutely nothing wrong with it. But as soon as you go to the next level, you compromise yourself emotionally. And guess what happens to people that are emotional that make decisions? They mess their lives up. They mess their lives up. They either blow up their relationships, they lose all their money, or they run into drug and alcohol issues. Do your best to be as even keel as you can. Now, I'm not to say don't be boring. Just be even keel. So that goes out to whoever was bashing me online yesterday. I feel for you, kid. I guarantee you lost money today. In any case, back to Dylan's question. Shane, what EMA strategy is best for 5-minute scalping? I love this one. This RSI with the 9 EMA. Love this one. Love RSI confirmation. Love this. However, the way that I would do it and approach it professionally is with Fibonacci retracements. I would definitely be making sure that I was getting very good entry points. That could really help you, especially the 5-minute chart. Now, the 920 on a 5, that ain't so bad either. That ain't so bad either. And the reason why it's not so bad is when you incorporate RSI confirmation right there, oversold territory, you're looking to buy, and then you grab that crossover, that's good stuff. That's absolutely good stuff. And one of the beauties of this 5-minute chart is you really can set up your stop losses and your profit targets. Bang. Okay, there's a stop. Put your stop loss right there. There's your crossover, and then you get the move. Does that happen every day? No, it doesn't happen every day. Did it happen today? Yes, it did. So I would say a 5-minute chart. I really like the 920 crossover. However, we've got several of them that are pretty good. The 9 EMA is going to get you into more trades. The 9 EMA is going to get you trading all day. If you want to trade all day, that's what you would do. Another one that I really like is the 5813. Let's go ahead and check that one out here. Let's go ahead and open. I got a lot of templates, so you'll have to bear with me. The 5813. I tried to code something for the 5813 and had a little bit of an issue. So AI is not infallible. But the 5813 on a 5-minute chart, it can be fire. It really can be. And the reason why is you got your 13 in there really to sort of clean house. So if you were going to work a 5 and an 8 crossover, very short time frames, very compressed. But what I love is the 13. The 13 tells you exactly what the market's doing. It's my favorite EMA by far, no question. And it's on every one of my charts. Like when I go look at my own analysis, my Fibonacci stuff, that blue line right there, that's my 13 EMA. And believe me, I watch it and I trade it. Now, when we're talking crossovers with this, very simple. The 5 crosses over the 8, and as long as price is above all 3, above your 13, then it's fire away. Buy the market. On the opposite side, when the 5 crosses over the 8 and price is beneath all 3, then you go with it. I think those two strategies, you can go 9 EMA, you can go 5813, or you can go 920. The 920 with RSI is powerful. That thing's powerful. So I would really be watching that one closely with regards to a scalping strategy. Those can all work if you're looking at a 5-minute chart. Fibonacci's don't work as well on short time frames. They don't. If you're going to use my Fibonacci retracement approach, the counterpunch, you've got to be during active periods in the market. And that's typically, pretty much all year long. So I hope that helps, Dylan. Let me see. Jonathan Ross, the Great Britain pound, US dollar, US 500, and US 30 is what I'm scalping right now. Okay, that's fantastic, Jonathan. So if you're scalping the Great Britain pound USD on a 1-minute chart, I would highly recommend either doing that around news releases like I just recommended, because you're going to need the volatility to drive the market a certain way. A lot of times if we go to a scalping approach like this 9 EMA and we go to like a Great Britain pound down to say a 1 minute, life gets tough, guys. Life gets tough, and the reason why is you see a lot of frequent crossovers. A lot of times, like in situations like this, are we really getting any moves? Are the profit targets worth it for us? So like right here, let's say we were going to take that cross under, even down to the bottom of this range is only 132.50. Stop loss would have been 132.67. Entry would have been maybe somewhere in here. Is it worth it? So if you're going to trade highly leveraged like that, then you can certainly do it. You can certainly do it, something like this. But fascinating stuff. Absolutely fascinating stuff. Let me see. Jonathan, I use a 9-shift 1 with the 7-shift 0 and confirm with RSI and OSMA divergence. That's power sauce. This is power sauce. Yeah. I mean, that's advanced. I will tell you that. That's advanced. I think that if you find a strategy that, like I said, there's only 2 rules on these streams. There really is. All I care about is, number 1, making money. That's it. If it makes money, it's the right answer. If you can do it, you can do it. I don't care. And the second thing is, I don't like academics that sit up here and just run their mouths all day long talking about esoteric stuff. I mean, that just doesn't matter, guys. You want to be in the markets. You want to be able to build profitability. And me sitting here giving you a long, drawn-out explanation on the impact of the Middle East negotiations between Qatar and the U.S. and what's that going to do to Brent crude, and are the hedgers going to jump from Brent crude to WTI and liquidity? None of that matters. What matters is can we buy low and sell high, and can we sell high and buy low? That's it. That's all that matters. We give you a pretty good framework on these live streams, tell you when the key events are going to come across, tell you what to expect in the future, and also give you lots of different ways to trade it. That's for sure. Yep, absolutely, Dylan. You're welcome. Absolutely. Shane, how many back tests should I do for the strategy? Here's where I have a real issue, back testing. Now, let's be honest. If you're going to go with a 5-minute chart, let's say you're going to use this strategy on the 5-minute. The number one thing you have to do is understand how to structure your back test. I don't want you looking at 5-minute charts for the Great Britain pound USD from 2 o'clock in the afternoon in the U.S. to 6 o'clock in the evening my time, so 4 to 8. You wouldn't include that in your back test. And the reason why is the markets are dead. You cannot look at a 5-minute strategy trade on the Great Britain pound USD during that U.S.-London overlap when the market's hot. I mean, that's when it's hot. That's when you want to be in there working something like this. You can't compare those results to dead periods in the market. You absolutely cannot do that. So if you're going to build a back test, that's the first thing. You got to say, okay, what's my trading day going to look like? I trade from here to here. All right, I want to know how the Great Britain pound USD performs during this time. That's the first thing I would say, or my strategy performs during this period. The other thing that I get a lot of, and this was a great question. Thank you for bringing that up, Dylan. The traders will reach out to me, and they'll say, Shane, I want 20-year, 15-minute data for my Forex pairs, intraday data. Where can I get it? And I go, okay, you're going to have to buy it. Number one, you're going to have to go find a vendor that has that. Boy, it's a great question. It just opens up such a can of worms and brings back a lot of feelings. I started when I was 31 in this business. I'm 46 now. I'll be 46 next month. All right. I've been doing this. I know what I'm talking about when it comes to back testing. Our first deal, when I got in, I was in the 7 V-Bar trading group that was run by my uncle, Gary Vernier, who was a Shell Oil executive, and he was a big-time upstairs trader in New York City. Made a lot of money, millions of dollars. And our first, our first job, or me and let me see, my cousin was a partner, and we had another partner out of New York that was an old pit trader. Our first job was to build a back-tested results for specific markets and time frames using a strategy that we were going to employ. Okay. The first thing that we wanted to do is say, okay, let's go back 3 years. All right. So we went out and got 3 years of data. Back then you had to buy it. We bought it from CQG. We went through, we sorted out the tick data. We put it on our platforms and went through manually and did the back testing. Okay. Then we went through and started optimizing. This was a brilliant idea of somebody in our group. Well, let's optimize it. And what optimize meant is it gave you a risk versus reward. So not even a risk versus reward ratio. It was just, here's your stop loss and here's where your profit target should be. Okay. So we went through and did all that. And what we figured out was how to trade yesterday perfectly. We said, well, we just ran a giant study that took literally 2 years, burnt through I don't know how many tablets of paper and pencils. My wrist hurt, got arthritis in my hand pretty much. And we didn't come up with anything useful, not one thing. We figured out how to trade the last 3 years perfectly, meaning when we optimized, every time we got let's say we got a buy signal of a certain sort, I'd say, let's say we got an A buy or a buy signal A, and I would look at buy signal A, I would look at the chart, and I would say, okay, this one's good right now. My stop loss should be 25 ticks, and my profit target should be 80 ticks. And we would put the trades down, and guess what happened? We lost money consistently. And the reason why was the market conditions today did not reflect the market conditions and the market state of our data set. And everything that we used were pretty much averages. We took all the data, we averaged it all together like a bunch of grade schoolers. Nowadays, you have AI tools. You have a lot of tools that can really help you build a strategy that's going to work and maybe is a little bit more robust. But when you ask me how far back should you go with a 5-minute chart, 90 days, 30 days. Start with 30 days. Start with the U.S. London overlap. Go back, spot all your entries for 30 days, and then roll with it. Give me 30 days. How many setups a day do you think you're getting between, I don't know, 6 o'clock my time to 11 o'clock or 5 hours a day? Focus on that. Go through, do it manually too. I mean, they have all sorts of AI things you can use, and that's great, and a lot of them are fantastic. There's one that's in development that actually has already hit the wires that you can use over there at Switch Markets. It's called Algo Builder. You can get on there and start trying to build strategies that are going to give you results. Okay, you can do that. There's a lot of them back there. I believe Optimize AI was one that I was playing with, and I ran into some real issues with it because I didn't particularly like the way that it was coding what I was telling it to code. And they'd say, well, that's your fault. And I'd say, no, the functionality is not there yet. So I would recommend doing a little hand back testing. Take an hour a day. Maybe if you got a free Saturday morning, 3 or 4 hours, get a big cup of coffee, get up early, and take a look at 2 or 3 weeks worth of data and see what you see. Stay objective. Give me clean entry points. Give me a product's max move, and then measure between the entry point and the previous swing high where we put our stops. Measure those distances, check the moves out for the last couple of weeks, and sort of see what it's going to feel like to do that. You don't need to do it for 20 years or 15 years. The market 15 years ago is not the market today. We learned that the hard way, and it cost us thousands and thousands of dollars. So back testing is something that really, I could talk about back testing all day long. We don't talk enough about forward testing. We don't talk enough about Monte Carlo simulations. We don't talk enough about degrees of freedom and not just testing a strategy on one particular market, but finding its efficacy by testing over 5 or 6 different markets. That's the only way you really know if one of these things can work. You know, well, it works really good on the Great Britain pound, but it really struggles on silver. Okay, why? Well, silver's more volatile. Okay. The time period. Maybe silver is active during that time. Those are all the things you got to think about if you're going to back test. Back testing and getting any sort of useful information is one of the most sophisticated things you can do. And it's hard. It's very difficult. For me, I decided very early on in my career I was going to go off my gut feeling and intuition. I was going to use technical indicators, but the first thing I was going to learn to do is spot when a market's trending and when it's not. If I know that, I'm in pretty good shape. So that's a good question. How many back tests should I do for the strategy? Go 30 days. If you don't like what you see after 30, maybe bag it, go to a different market. But that right there on a 9 EMA will work. You can do it by hand too. Just go with your maximum volume areas. Try those, 5-minute chart, bang it out. It'll work. All right. I promised some live cattle action. This is really a good. This is sort of a question that I got, Shane. You know, what stories move the markets? How do you know what's going to move the market? From a broader perspective, if some of you stay in this game long enough, you'll realize which news items move markets. I knew immediately the U.S.-UK deal was going to move the cattle market, and the reason how I knew it is I watched the press conference and I watched the young lady, the Department of Agriculture, step up and they started making a huge deal out of exports, U.S. exports to the U.K. Now, why would that bring prices down? Because the U.S. is going to beef up their herd strength. Herd strength was very, very low. That's why we saw prices really rise. Now all those steers, all the feeder cattle or the live cattle are going to turn into feeder cattle. I live in an agricultural area. All those cattle are being taken by rail right now to the feedlots where they're going to beef them up. And it turns out there was a hell of a lot more of them than they thought. Big time correction. It goes right to your news feed and your data. And if you're trading like something like agricultural commodities, then you get that data. That data set comes in when, man, there's a lot of live cattle being delivered to the feedlots. Then you get a major sell-off, which is what we had right there. So I'm watching this trend closely. That's an example of something that can move the markets. All right, a couple of other things. As far as Bitcoin goes, we put out this a while back. We talked about really getting steam above 100,000. Absolutely no question about it. This weekly chart pulled back right to about 100. That's what we did earlier in the week, and then we rallied right up into our area, which I pretty much got our double top built between 108.36 and 109. That area right there is resistance. It's acting as topside resistance, sort of a supply zone there. Once that supply zone's gone, you're looking at 125,000. That's a bold statement. That can happen. That can happen fast. I'm watching this closely. I think Bitcoin's ripe for another leg up in this. Very quiet week, pullback week. You know, it's a doji, but pull back. What was your low? Right around 100, 764. Top side was about 105. This looks to me like we're loading up to make another leg higher. If you're short Bitcoin derivatives, be very careful. Have your back against that double top or you could run into real trouble. That's for sure. The gold market. Gold market, we had a great call on this week. We talked about 3,100, somewhere in the 35 area. We had a trade idea out. Nice big sell-off, and we bounced right off of 38%. Negative month for gold. All of a sudden, the tariffs aren't doing what everybody thought they were, and you've also got sort of the trade deal angst is real, or the trade deals that are being announced are really removing all the market angst. VIX is down, gold's down. Do we want to be in safe haven assets? Not if the markets are going to go up, not if stocks are going to go up. So that right there is huge. That was a pretty darn good call. Now it's time for the heartbreaker. This one broke my heart. It really did. These are gold futures, June gold futures. Sort of had a daily, really a beautiful daily wave. What I like to do is use Fibonacci retracements, and I just work them right from the top of a swing high right to a low. Game plan was easy. Sell 38%, and then take a position. If you sold 38% and you took a position in this market, you're right around 32.47, and right now you're printing about 31.87, but you were as low as about 31, right there, 31.50. I mean, that, you know, 31.50 up to 32.47, that's almost $100. Very close. You know, every dollar, $10 a point. Every dollar is $100, $100. How big of a move is that? $10,000 move? Yeah. So if you're looking at a $10,000 move and you put 3 contracts on, that trade's worth $30,000. Honestly, my ambition was somewhere in here. I was looking for, you know, probably 7,500 to 10,000 on the trade, and this is what'll kill you, and this is what'll break you down as a trader. Here's a 30-minute chart. I was right here, short here. Look where the price rallies. So if I'm selling my level right there, 32.47, price rallies up to the top, 32.55. That's a heck of a draw with 3 lots. It was about a $2,400 draw, somewhere in there. Couldn't take it. So my basic stop out point was right around 50. And so ended up having to get out of the market. Now, there was a lot of rules for re-entry. Could definitely have re-entered that one. The problem is this topside rally was an absolute heartbreaker. And because I did not take the time, I was so excited about the trade. I said, this trade could really go for us. I mean, it could really go. And my eyes are lighting up, and I'm already thinking about new trucks and stuff and steak dinners. And should have just stepped back and went, okay, what do I think could happen here? I think it could be a major move. Gold's been getting hit, 38% retracement on the daily. What do you do? And I go, I can't. I got to get in. And I did have to get in, no question about it. So we took the short, watched it absolutely explode in my face right away. Just exploded. This area right in here. I mean, if we take it down to, say, a 5-minute chart, it just was an explosion. Several chances, sold right in here, got immediately a big bump, had several chances. This chance right here to break looked to me like we were breaking right there. Low liquidity, low volumes, a lot of action. The trading DOM was all over the place. The volatility is huge. I mean, just like that bar right there. You're looking at, let's see, a high of 32.50 and a low of 47, so about $3, 36 ticks on a 5-minute bar. At that time of day, I was like, oh, man. So what happens? I take a pretty good draw, but then we come back down, and right at that point right there, I'm saying we are very close to something very good. And then what happens? We come in and sweep higher. That sweeps price up to 32.53, and you can't really stay in there with leverage that big. So what I'm saying is this. That was a rookie mistake, and it cost me. Even when you're 15 years into this business and you've placed literally thousands of trades and you've had hundreds and hundreds of thousands go through your accounts, you still make mistakes. So what did I do wrong? I over-leveraged. If I would have put one contract on, we would have walked away. We would have walked away probably with $3,000 instead of what? Instead of a $1,000 loss that meant nothing. So always remember that the hardest part of these markets is timing them. And everybody makes mistakes. You're going to make mistakes too. Learn from your mistakes. Stay optimistic and positive. Come back to trade when you're ready to go. I'm a little tentative today. I don't want to get in there. I'm looking at the price right now. I'm looking at, let me see, WTI crude oils at 61.90. I want to sell 62.43s. I want to sell price 62.39s, somewhere in there. That's going to be a great trade if we get it, and we may get it. We've got about an hour left of really premium trading in WTI, front month July futures. I just don't. It's Friday afternoon. I don't particularly want to throw it in. I want to come back next week and have a big week. Make back those losses and then some. I plan on that. That will happen. But you got to learn what you did, and I over-leveraged that. So there's two ways to fix that problem of over-leveraging. Number one, put more money in your account and play bigger. That's the first thing that can save you. Or number two, just cut your position size. Instead of 3 lots, trade 1 lot. I had 3 lots on that. And things happen fast. So interesting dynamic, a pretty good psychology lesson, and just to tell you that everybody makes mistakes. That was a bad one, though. That would have been one if I was with the 7V Bar trading group back when I first started out. Might have got fired over that one. That's a bad one. You can't make that mistake, but we make mistakes. You're human. I'm human. It's the human element, man. That's what it is. All right, let me see. One more question from Dylan, then I'm going to get going here. Shane, how long does it take for you to be a profitable trader? Great question. Let's go ahead and end on that. Everybody's different. Everybody's different. I can tell you that if you dedicate yourself and study hard and do what you got to do and be focused and figure out how to manage this life, that's the hardest part of becoming a profitable trader and getting into this lifestyle is, number one, being able to handle the swings, the ups and the downs. Had I taken that day when I was 31 or 32, I mean, I'll just tell you, I probably would have went to the bar Thursday night and I'd still be there. I wouldn't have been able to deal with that mentally. I just didn't have the experience. And those are the things that really get in people's way of being a profitable trader. If you can work your psychology, I mean, we can teach anybody these strategies. And it doesn't take, you don't have to be a genius to trade the 9 EMA. You just don't. I mean, it's relatively simple. Risk reward, understanding market state, having the discipline to ride those trades out to where they need to go, and having the discipline to cut them off. Those are things that take a lot of time to develop. Yeah, a trader has to be able to let go of everything and hold on to everything all at once. You have to say, okay, I got to relax and I got to let the market happen and come to me. But I also have to be disciplined when I have to cut it off. I got to get in there and cut it off. That takes time. So while I can sit here and we can show you strategies that are going to generate you some good entries and exits and put you in positions to win. Just because you're making money right away doesn't mean that you're profitable over the long run. That's going to boil down to your psychology and what you bring into this game, and that's all it is a big game. I mean, I have two 32-inch monitors in front of me. I'm a grown man. You know, we're playing video games. We're just playing it for money. So I would say that the strategic end of it, you probably should be able, honestly, something like the 9 EMA or the 920 crossover or one of those, you should be able to master that in 6 weeks. Those are easy. And that's 6 weeks learning the strategy top to bottom, watching people trade it and then getting in and demo trading it and then starting to trade it with real money. Within 6 weeks, you should be able to do that. Now, whether you can become a profitable trader consistently over that period of time, what I'm saying is it's different for everyone. I would say a good guideline. I'll tell you what I was taught. We had a trader that I started with that was one of our partners. The gentleman's name was Mike, and he was a big shot New York trader. He was $1 million pit trader making the transition to the screen. And I remember when I was right there, I was in your shoes, Dylan, when you're talking about how long does it take. I was sitting there. I had worked. My eyes lit up because I saw the possibilities immediately, and I had all this reading. My uncle gave me all this really heavy reading and made everything as hard as he possibly could. And I read all this stuff, and I did the work. And then I was on demo for like 6 weeks, and I was turning a profit every single day on demo. And I was like, okay, I'm gonna get in there and just knock this game out. And then I went live. Struggle, things changed. Emotions got involved. Psychology changed. Hit a flat part in the market. I remember going live in late June. Really not a great time to be going live. I just traded the whole spring profitably on demo. And there I was in June. So at that point, I was probably, 3 months into my journey, 4 months. So I go live, and I can't wait. I go, I'm going to tear this market up. All right. So I got in there and started trading. Had a real tough experience right away. Then started making money. And boy, I thought I had the world. I had it licked. But I remember right when I was struggling at first, I asked Mike, and here's the guy that had millions of dollars, and he making the transition, still trying to get going on the screen himself. And I said, Mike, how long does it take to get this game? Because in my head, I was thinking, okay, I'm going to give it 6 months. I'm going to give it a year. And if I can't make it go, then I'm out. Because that's how we all think. We're okay. If this isn't going to work, I got to go do something else. Because we're all impatient. None of us have really any concept of what time means. I could have waited 30 minutes and made a lot of money last night, but it didn't happen. Okay. He goes, Shane, 6 months. If you don't have it in 6 months and you're not getting the job done in 6 months, you need to go find something else to do. And I said, okay. So 6 months was my guideline. So that's sort of what I tell everybody that asks me that question. How long is this going to take? I said, give it 6 months. Apply yourself, get in there, as much screen time as you can. Learn to demo trade, put some live money in, small accounts, start small, don't go into a hole. A couple $100, or maybe you can open them with $50 now. A couple $100 or $50, just get in there, let it roll, see what you got. See where you're at in 6 months. If you can make pennies, you can make dollars. That's it. So that's what I would say, 6 months. Jonathan, Shane, what is your approach to funded accounts? You use them, recommend them, or prefer to go full way with your own capital? Oh, you mean prop accounts? Well, that's a good question. In my personal trading journey, I started out 7 V-Bar Trading Group. Started out with like $3,000. I was trading the company's account. I was trading a sub account for the company, so there was X amount in the middle, and then I had my little sub account, and they did that so they could control what exactly you were doing in the market every day, and that was fine. I didn't mind that. That was someone else's money. And then there was a problem. The trading group disbanded. So my uncle died. He had a massive coronary and fell over. Actually, not while we were trading, but in front of the screen. That's what he always said. He said, "I'm going to die in front of the trading screen," and he literally did. He had a big office and stuff over in Utah, and I had to go prop. Back then, there weren't many prop firms. There was one. It was Top Step Trader, and I got funded with them. I busted my tail. I got funded with them. Traded with them for, I don't know, 6 months or so. Moderate success, really small account, tough to do it with the risk guidelines they put on you, but gained a lot of experience. Back then it was more expensive too. What I would recommend if you're looking to make a living in this business, Jonathan, and you need some experience, work with the prop accounts first. If you don't need the money right away, work with the prop accounts first. There's a few here in the States that are really cheap that do futures. But when you're working with a prop account, I don't know that I would sit around waiting for my check to come in the mail. If you're doing it to learn, that's great. But I would be surprised if you're going to get huge payouts right away at least. I prefer real money. I like my own skin in the game. I like it if I sit down today and I get in there and let's say my WTI trade comes my way. Let's just go ahead and go out to the charts here. Let's see, 5-minute chart. If my trade comes my way today, okay, you can see it may. I mean, we've sort of got a bullish type of a pennant developing there. My top side range number, which is secret sauce, that's going to be a range oscillator, is going to have me selling right up in this area, right in front of 62.50. You can see the bullish trends developing. I want my own money on that, and the reason why is if I hit that thing and walk away with $500 or $600, which is the plan, I want that money at the end of the day. And now with the futures markets here in the United States and most of your Forex outs, I mean, they've got ACH, there's debit card, there's all sorts of different ways that they can just get the money to you the next day. So sometimes when you have a nice day or a nice week, you just cash that money out directly to your account. I like that. That's paying yourself for your time. That's cash flow. I'm always a big fan of people want to build their accounts up and they go say, okay, I'm going to start with 5,000 and I'm going to build it over time into 15 and then we're going to go exponential. And that's great. That's great. For me, I like the cash. If I want to build my account up bigger, I just deposit more cash, but I want them to pay me. When I win, I want my money. I mean, I'm like, sort of like online gambling or gambling in Vegas. If I get hot at the tables, I want my cash right now. So that's sort of the way that I look at the game. But if you're learning, or if you don't have much money to trade with, and you still want to have a shot at making some big returns, prop accounts can be good. They really can be. I think that a lot of them offer some solid funding options where you can start getting your hands on $50,000 or $100,000 to trade with. Now you're going to have to play by their rules, and believe me, most of those rules are designed to knock you out of the game. But could it be good? Yeah, it could be good. So that's what I would say. But there's a few here in the United States that offer really low account funding, and they also have a lot of people that are angry at them for not paying out. So if you're going to pay a lot of money for an evaluation account, you need to make sure that you're going to get your money. Because of that, Jonathan, I like my own cash. I like cash. Cash is king in this world. All right, guys, I've rambled on way too long. Fun session, though. It's always nice just to have a psychology and just to talk for a while. We covered a lot. We covered a lot of ground today. So if you have any other questions, you just head on over to How to Trade. Just send me a private message, and I'll do my best to get back to you in short order. I typically do. You can always ask questions, too, on our YouTube channel, How to Trade Calm. I answer all those personally. So if you have something to say, you can always say it there. Get a lot of great feedback, a lot of good compliments. And also, there's always some haters out there, some keyboard warriors. But that's okay, too. I don't mind. I really don't mind. You guys feel free to say whatever you want. I don't worry. All right. Good to see you, Tuku. Welcome. You guys have a fantastic weekend. I'm going to go ahead and kick off. I got a few other things to do for next week's previews and things, but we'll be back with 4 live streams next week. And we'll be ready to rock and roll. Jonathan, thanks for all the lives. Thank you for the information. Absolutely. If you guys need anything else, I'm a pretty good resource. I get back to you. I like working with traders of all levels, all experience levels, and I love to hear what you guys are doing. So go ahead and reach out to me at How to Trade. All right, guys, fantastic. Have a great weekend. Trade the action well, and we'll talk soon. See you.